Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. First of all, I would like to appreciate your patience for waiting through as I had to sort out some personal activities behind the scenes before coming in. I actually thought I would be spending roughly 20-25 minutes, but I had to spend more just to sort things out. But thank goodness we are here, and glad to have you around with me this morning. I welcome you all to yet another promising edition on the Forex Morning Mastery, your daily dose of financial insight and trading strategies. My own name is Sharif Daramola, and for the next today's session is going to be a little bit short due to the time frame we have left. So within the next 30 minutes, we should be done from this session. And of course, during the course of the session, we are going to be revisiting the assets on our watch list. And for those of you who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as to how we are going to be managing our positions today. It has been quite a very phenomenal week for us all so far, as all the assets we had has been in profit so far the week has begun. And surprisingly, we were actually expecting a little bit of consolidative action before price action inside that bullish or bearish move, whichever case it may be. As you all know, we were looking forward to the Fed Chairman's testification before the House of Congress. We're looking forward to the ISM Services PMI, the ADP employment change, and the NFP data coming up later in the week, which of course I thought majority in the market will be, the major key players in the market will be stepping aside, waiting for these events to happen to give fresh impetus. But that is why it is always important that we always be on standby to capitalize on any potential move that the market might present to us. And thank goodness we were able to run through with some profitable positions. We are going to be looking at those trades in a moment and see how we will be managing those positions using the historical data we will find on the 1 hour time frame. And for those of you who are joining us for the first time, you're highly welcome on board. If you are wondering what this is all about, well, let me quickly emphasize that during the course of the weekend, I usually share a couple of videos which details what our plans is going to be like for the new week. And so during the Forex Morning Mastery, we usually come together as a community to do follow-ups and reviews of our current trading positions in preparation of both the London and the New York session. This happens on a daily basis, and it kickstarts about 8:05 a.m. UTC officially and 9:05 a.m. West African time. And my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And the more time you spend with us in this community, the better you get to comprehend our analytical approach, hereby helping you to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business. And as usual, the first thing we normally do on a daily basis is to keep tabs with the fundamental factors that will be influencing the market sentiment for today. And usually we always focus on high impactful event, but in the case scenario where we do not have any high impactful event, we try to include mid-tier economic features to have a broader view into what majority in the market will be looking forward to. And based on the asset we are monitoring so far this week, we have been focusing on economic features from both the United States and the United Kingdom economic docket. Now, since the week began, we've had a couple of events which has already happened, like the Fed hacker speech, which happened yesterday, though I'm yet to have an highlight on that one. But by the end of today, I should be able to get some insight, and then I will be sharing with you details during tomorrow's session. Now, today, Tuesday, March 5, we had the BRC like for like retail sales data, which in fact came in below expectation. And for those of us who are trading the GBPUSD, you would have seen how the market had reacted to this event negatively. Now, for those who don't know what the British Retail Consortium like-for-like retail sales measure is all about, it measures the changes in the actual value of retail sales from participating companies with invaluable management information on a regular and reliable basis. So it usually shows us the performance of the retail sector of the United Kingdom, and a high reading is considered to be positive, hereby resulting in a bullish traction in favor of the pound sterling. And if the reading comes in below expectation, we usually see a negative traction against the pound sterling. And this was exactly what happened this morning when the data came in. Remember, the previous month of March came in at 1.4% expansion, and economists were projecting a 1.6% expansion, but unfortunately the data came in at 1% below expectation and giving us a negative deviation of 2.33. So this has of course incited some bearish traction across the pound sterling asset, and of course on our asset we were taking out of all the buy positions we had yesterday with some reasonable amount of profit. So we are going to be looking at that in a moment and see how we intend to capitalize on the next move. Now, besides this event, there are a bunch of impactful events from the United States. In fact, one of the major ones for today, which is considered to be an high impactful event, is the ISM Services PMI. Now, for those of us who do not know, the ISM Services PMI is a key economic indicator that measures the performance and expectations of the service sector in the United States. So we've seen the retail sector in the United Kingdom this morning, how the performance was like. So we are going to be tuning into the United States to see the performance of the services sector. Now, a higher than expected data typically signals economic expansion, boosting market sentiment, while a lower than expected reading may indicate contraction and of course potentially dampen investors' decisions. Now, looking at the previous data here for the month of January, it came in at 53.4, and usually it's this publication, the index is on a scale of 0 to 100, and anything above 50 is considered as an expansion, and anything below 50 is considered as a contraction. Now, if we look at the previous month of January, it came in at 53.4, so it's a little bit higher than the 50 mark, giving us an expansion there. Then consensus are projecting a 53, a little bit 0.4 below the previous month. So we're going to be looking forward to what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? Then we are going to be having a speech later today. We have the Fed official Michael S. Barr, who is the vice chair for the supervision of board of governors of the Federal Reserve System, and he's also a serving member of the board of governors in the Federal Reserve too as well. So whatever he says today is going to be carrying a lot of weight, as it will be giving us an insight into the monetary policy of the Federal Reserve, their policy stance, of course, the economic outlook, and of course the potential future policy action, which majority in the market will be looking forward to guide their trading decisions, especially in the situation where majority are considering a potential rate cut as sooner than expected at this point. So we want to be having a clue to see how that is going to be playing out. And tomorrow we are looking forward to the Fed Chair's testification before the House of Congress, which is another important event where it will be providing a broad overview of the economy and the monetary policy of the Federal Reserve. So his remarks, this event too is a very, very significant one. So we are going to be seeing the effect of the anticipation of tomorrow's Fed Chair's testification in the market today. So we are going to be taking that also into consideration while we review the current market structure. So these are the impactful event we will be looking forward to today. So I encourage us all to mark out the timing so that we can strategically be on standby to capitalize on any move when it happens. So we all understand that the anticipation of such events as a way of influencing the market sentiment, which obviously will reflect on the chart as price action. And what we are going to be doing today, as usual, is to sniff through the current market dynamics to identify structures and patterns that we will be using to position ourselves for the next move. So with that being said, here we will be diving right into the business. And as usual, the first asset we are going to be taking on this morning is going to be the USOILSPOT. And remember, yesterday we had a beautiful range which was supposed to be guiding our trading decisions after we did a top-down analysis on this asset. And of course, we had this range between the $79.80 level and the $79.25 area, where we were looking out for either the breakout or the breakdown of the support line for an opportunity to either buy or sell. And I can remember that during the New York session yesterday, I think an hour or two into the New York session, I quickly gave an update after noticing the bearish momentum that broke down this ascending trend line at that time. And I quickly told us that we have cited a bearish momentum which has actually broke down the ascending trend line. Hence, a retest of structure will be all we need to join the bearish move to the downside. And you can see what happened here. Price action continued the momentum, and we took advantage of that bearish move right at the breakdown of the $79.25 level, and then added more sell position at the breakdown of the $78.50 level, which happens to be our key level for this week. And in my commentary this morning, for those of you who saw my commentary on my Telegram platform, I did emphasize that we do want to be moving our stop losses accordingly to secure this current sell position. And if you had done that, you must have been taken out of that positions with a minimum of 150 pips on that one. So it's not a bad start for us for the week, as we were able to kickstart the week on a positive note on the USOILSPOT. And for those of us who capitalize on this opportunity, well done and kudos to you for being on standby. Now, with the situation we have right now, what is going to be our plans as we get prepared for today's trading session? And it's surprising to me actually that the US oil prices is declining at this moment, and in fact I want to consider this decline as a potential retracement of that impulsive bullish move we saw during the course of last week. And what makes it more surprising is that despite the concerted effort by the OPEC Plus nations to enforce voluntary cuts in oil production, crude prices still remain under significant downward pressure. And coupled with the geopolitical tensions in the Middle East, which is expected to stabilize oil price, at least maintain it at high levels, is not doing so at this point. Now, the question now is, what is the reason behind this? We saw Houthi attacks in the Middle East in the last couple of days. We saw how the Israeli Prime Minister Netanyahu is not keen to get involved in the negotiation process with the Hamas and Egyptian mediators. And of course, the further cut in oil production by Russia, Iraq, and the United Arab Emirates is not at the same time, is not even having any influence in the market. So at this point, I'm beginning to think what may likely be happening. Now, the answer lies within the technical structure, as it will reveal how market participants are thinking in this market. Now, I would like to revisit the higher time frame for us to have an holistic understanding into what is happening in this market. Now, in that regard, This is a one-off situation here. We have remember that at the beginning of the week we did talk about the importance of that key level at the $78.50 level. I will just touch through this one. I'm not going to go into details. If you do want to have an understanding into what we talk about, you can find the link in the description box below to review what we did yesterday. So we have the key level here, which of course we have been waiting for the last 3 to 4 months for price action to break out of that structure to validate that reversal setup we were looking at. And last week we finally saw the breakout, and at the beginning of this week we were considering if this breakout is going to turn out to be a valid one or a false breakout. And if it's going to be a true breakout, we want to see price come back to retest the $78.50 level, and as you will see, price action had already broken down that structure. Now, are we going to see price climb back above the $78.50 level? And if that is going to be the case, then I'm of the opinion that the bearish momentum that started yesterday may have been a retracement move. Hence, we want to be getting ready for the next wave of bullish momentum. However, if price action continues to trade below this potential neckline, then we'll have no other choice than to start looking out for more opportunities to sell. So I needed us to see what things are looking like on the daily time frame so we can have an understanding of what I'm talking about here. So scaling back down into the 1 hour time frame this morning, I did identify another level at the $77.70 area, and in fact, if you look at this level throughout the course of last week, it had played a major role in guiding the direction of price action. At some point, it was a selling niche at the beginning of the week, as you will see right here, and then we saw price break out of that $77.70 level. And since the breakout happened on Tuesday of last week trading session, price action had remained above that area to emphasize the strength of the buyers at this point. And you can see that at every point in time that sellers tried to push through that level, we saw how buyers came in to negate all their attempt. And in the last 3 hours, despite the strong bearish momentum that started this week, you will see that price was not even strong. The momentum was not even strong enough to come close to the $77.70 area. And immediately price got to that area, we saw an engulfing bullish candle trying to build up in momentum, maybe in continuation of the uptrend move that started last week. So as a result of this observation, we want to be seeing the $77.70 area as a structure that has a strong memory for buying power. And as long as price action remains above this structure, we will definitely be looking out for patterns and structures that support the idea of buying, and we are not going to be selling unless price action breaks down this particular structure. Now, if we look at what has been going on in the last 24 hours, we're beginning to see what may look like a reversal pattern. Now, looking at this impulsive bearish move to the downside where it broke down the $78.50 level, our key level, then we saw price come back into structure, then it dropped further to the downside, which may be the head of a potential inverse head and shoulder pattern where the right shoulder may form and the neckline may be serving at the $78.50 level to incite a reversal pattern where we will need price action to break out, retest the neckline to incite an uptrend move. So with this information here, I'm looking at buying opportunities at the breakout of the key level situated at the $78.50 level. Now, if we see anything like a higher low, something like this, if price retraces back into structure and we begin to see some series of higher highs and higher lows on our 15 minutes time frame, we could actually join the bullish momentum and then maximize it by adding more positions at the breakout of the $78.50 level. Then this will be a typical signal that the bearish momentum from yesterday has ended and that the retracement move also has ended. So we want to be getting ready for an uptrend move. And if price continues to climb and find new highs, we have the $79.25 area where we will be adding more buy positions, and in fact more multiple entries had the breakout of the $79.80 level, and we also have the $80.30 area, which happens to be the highest point price action has been for this year. So this is how we are going to be managing buy positions today. We are right above a robust bullish platform, so above the $78.50 level makes a lot of sense for us to look out for buying opportunities. And this technical behavior we just saw now is in alignment with the fundamentals we talked about earlier. So all the fundamental factors are leaning towards a bullish traction in favor of the US oil spot. So we look at above the $78.50 level for buying opportunities. However, if the bearish momentum continues and in such a way that it breaks down the $77.70 area, then we want to be adding more sell positions to our existing trade. So this is where our center of focus will be for today, between the $78.50 level and the $77.70 area, where depending on the direction of the breakout will give us an idea of where we are going. So this is my simple view on the US oil spot for today. So if you have any questions, let me know in the comment section. I wouldn't be taking a break due to the limited time I have, but if you have any questions, feel free to let me know in the comment section. So I will be going right into the next asset on our watch list. So the next asset we are going to be looking at this morning is going to be the GBPUSD, which we started trading last week after a six weeks break. And we've had quite an interesting situation. From last week, we were buying this asset, and in fact, we had 3 buy positions along, I think four buy positions along the line, where the 4th position did not do very well before we were taken out with a reasonable amount of profit. Remember, during our live session yesterday, the first thing we did acknowledge on the 1 hour time frame was the ascending trend line that we have here, and we agreed that as long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying this asset, and the only condition that will make us to sell is for price to breach and break down the ascending trend line. Now, in addition to the what's happening here? Okay, so in addition to the ascending trend line, we let me zoom this in so that we can see this clearly. So in addition to the ascending trend line was a range where we saw price action confined within the 1.26670 level and the 1.26520 area at the beginning of the week, and of course we were looking forward to the breakout of this 1.267 to capitalize on bullish opportunity. And for those of us who missed out yesterday, the market came back to retest structure to trigger a buy position. We had position at the breakout of the 1.267, our key level for this week. Then we kept on adding more position at the breakout of the 1.268 and the 1.267 here, which did not do very well. So the first buy position moved over 40 pips in our favor. The second one moved about 36, that's about 76 pips. The third one moved about 25 pips, that's over 100 pips thereabout. And the third one did not do very well, as it moved about 7 pips before the bearish momentum came in. And I can remember giving us an update on both my TradingView and Telegram platform that we do want to be securing more position, that is moving our stop loss accordingly to lock in the profit. And if you had done so, you must have been taken out with a reasonable amount of profit, let's say between 50 to 70 pips, depending on where you moved your stop losses to. And well done, and kudos to you for being on standby to capitalize on that opportunity. Now, as it is right now, since the later part of the New York session, we saw an interesting bearish move that began, leading to the breakdown of that ascending trend line, as you will see here, inciting a potential bearish opportunity. And later during the Asian session, we saw the momentum continue to the downside, which for me, I see as a reaction to the BRC like-for-like report that happened this morning. And of course, we saw how the data came in below expectation, making the market participant to react negatively to it, pushing price further to the downside. So I'm of the opinion that we cannot take this bearish move we cannot take it as a significant signal that price action is really going to the downside at this point. I'm of the opinion that market participant might just it might just be a knee-jerk reaction to that data, where market participant would try to digest the implication of what the data is and how it's going to be affecting the United Kingdom economy. And if the data is digested, we will begin to see some patterns that will give us a signal of where price action will be going. Generally speaking, the current outlook on this market still remains very bullish, and considering the fact that the US Treasury bond yield is still struggling, and we know how directly proportional the US Treasury bond yield is to the US dollar. If the US Treasury bond yield is struggling and going to the downside, obviously the dollar will also follow suit, and if the US Treasury bond yield is doing well, the dollar will also do well as well. Now, at this point in time, will the dollar continue to push its traction? Well, let's look at what the structure is saying. Now, looking at what we have here, remember what I said here yesterday after considering the breakout of this descending trend line that happened, and I did told you that if you are a counter trend trader, you might want to capitalize on the breakdown of the ascending trend line, where you can be looking at a TP target between the 1.26520, that's about 30 pips, to that descending trend line, which will be dovetailing to about 60 pips. And I did mention that I wouldn't be selling, but if you are a counter trend trader, a scalper, or one who takes advantage of short-term trading opportunity, well, you can capitalize on it. And if you have done so, you must have a position triggered at this point, and I will suggest that you move your stop losses right now to secure your position, as this bearish momentum might not hold water. Now, with the situation we have here, and looking at what has been going on since price action tested that 1.267 area, which happens to be the highest point for this week, we have a beautiful descending trend line we will be using to guide our decisions going forward today. Now, if this trend line continues to hold price action downwards, then we will have no other choice than to join the sell move. And personally, I'm not selling. If you're a counter trend trader or a short-term trader, you want to sell. And the reason why I'm not selling is simply because of this bust up along this descending trend line, where I will personally wait and see how the market will react to it. If I see double bottom structure or any form of reversal pattern, I will like to join the uptrend move. But if price drops and break down, then I want to be looking out for selling opportunities at that point. Now, as it is right now, you will notice that as soon as price action got into that area close to our key level, which is at the 1.267 area, we saw buy pressure resume above that structure. And you know how we use our key levels. Whenever price action remains above the key level, we obviously want to be looking out for patterns and structures that support the idea of buying. And looking at what has been going on here in the last 1, 2, 3, 4 hours, you will see that price action sellers have been struggling to continue that momentum to the downside. And in fact, it will make a lot of sense buying above the 1.26800 area. Now, at this point, we've missed out on this one, so we shall be looking forward to opportunities after price action has broken out of that descending trend line, which we should be having something around the 1.26. Hold on a second, I'm trying to see a confluence here. So we have the 1.26850 area, so you do want to be marking out that level on your chart, as price would have broken out of that descending trend line at that point. So we have the 1.26 850 level, so you do want to be marking that level out. So a breakout retest of that structure will be all we need to capitalize on that uptrend continuation. And if price goes ahead to break out of the 1.267, we're definitely going to be adding more buy positions for this trade. So the technical structure here is still looking very bullish. Even if price breaks down the 1.267, I told you earlier, I'm still looking out for buying opportunities around this level. So at this point, we shall maintain a bullish bias on this one, as the fundamentals, of course, still support the idea of buying this asset. And if it so happens that tomorrow, prior to the testification of the Federal Reserve Chairman before the Congress, we may likely see a new turn in market. But in the meantime, let's maintain this bullish bias here. So if you have any questions, let me know in the comment section. I wouldn't be taking any break due to my limited time. So we shall be running into the last trading last asset on our watch list for today. Stay tuned in. So the next asset on our watch list, and of course the final one, is the XAUUSD. What a phenomenal 24 hours we have here. This is in fact the most profitable asset on our watch list, as we are running with over close to 700 pips in profit from multiple buy entries. We have about 1, 2, 3, 4, 5, and we had the 6th one triggered a couple of hours ago, giving us some significant amount of profit on this one. So this is the most profitable asset for us this week, and I'm very excited and glad that we took advantage of this opportunity. Now let's quickly run through what really happened yesterday and what led to the decision of buying this asset. So the first thing we noticed here yesterday was the range, and of course price action was trading above our key level, which further supported buying opportunities for us. So we had a range between the 2086 and of course the $2088 level, where we were looking forward to either the breakdown of the support line of that range to give us an opportunity to sell, or the breakout of the resistance line of the range to give us an opportunity to buy. So with buy stop orders placed, at both ends, we had our first buy position triggered, had a breakout of the 2086, as you will see here. We also added more position at the breakout of the $2088 level. And for those of you who are part of our XAUUSD live window, we did updated our trading setup, where we said we will be adding more buy position at the 2101 level. We also added more at the breakout of the 2115, and the final one, which I did updated us this morning, had the $2120 area. And for those of you who did capitalize on this opportunity, kudos to you. Well done for being faithful with the analytical process. So what we are going to be doing right now, since price action had moved significantly well in our favor, is to ensure that we move all our stop losses accordingly and secure this position. And if you would ask me, I will suggest that anywhere between the $2120 area and the $2115 level seems most appropriate to move all stop losses to. Remember, we want to be giving enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action? Well, the momentum have been very bullish since last week Friday, and prior to the breakout of the structure, we had the range giving us a potential uptrend continuation pattern, which we can call a flag pattern, or we can call it a bullish rectangle pattern, depending on how you say it. Now we finally saw the breakout of that structure to emphasize, to validate the uptrend continuation, as we can see here. Now we want to see how far this momentum is going to go. This for me is surprising actually, as I was thinking that market participant will want to refrain from any aggressive bullish bet, especially when we are looking forward to the Fed Chair Jerome Powell's upcoming 2-day congressional testimony, which is starting tomorrow and ending on Thursday. But you know, the market does what it wants, and that's why we always try as much as possible to strategically position ourselves irrespective of whatever we think, so that we can capitalize on whatever the market presents to us. So at this point in time, well done everyone, well done. And at this point, from fundamental perspective, the downturn in the equity market too is also supporting demand for safe haven assets such as the gold. So everything is leaning towards a bullish expectation in this market. The US Treasury bond yield is subdued at this point. The equity market is not doing too well at this point. Then we also have the growing expectations of the interest rate cut by the Federal Reserve, possibly commencing in June. We don't have a precise timeline yet, so everyone is looking forward to what the Fed Chair is going to be saying tomorrow too as well. So everything is supporting a bullish traction. The geopolitical tensions in the Middle East is also there, which obviously supports demand for and supports the appeal and demand for safe haven assets. So let's continue to maintain a bullish bias unless the structure states otherwise, and to guide any bearish opportunity at this juncture, which may be as a result of an overbought situation, I will be only looking out for selling opportunities if the support line of that range at the 2110 level is broken to the downside, which may be the inception of a retracement move to probably retest the structure that was broken at the beginning of the week. But trust me, I will be with you in the comment sections to give you updates as at when due. Now, as regards to this recent bullish traction that broke out of the $2020 area, and for those of us who missed out on this opportunity, let's exercise patience and see if the market will come back to do a retest of any of the structure. It could be the 2120, it could be the $2115 area. All we want to see is buy pressure showing signs that sellers are finding it difficult to continue the momentum to the downside. So let's see how the market will play out. I will obviously give you updates on both my TradingView and Telegram platform. And you want to also be part of the XAUUSD live window, where we shall be coming here to monitor real-time price action on the XAUUSD. So this is my simple view on these assets for today. I do hope I made myself clear. But if you have any questions, feel free to let me know in the comment section. And as regards to your support, I'm yet to see your likes. So far we have over 6 people on board right now, and likes we have it is only 2. If you have found this content helpful and useful in making your independent trading decisions for today, I would greatly appreciate you give the video a thumbs up. Your likes are very valuable to me, and it also helps the algorithm push the video to a wider audience of traders who may find the content beneficial. And thank you very much as you do so. So let's make the like tally with the number of people on board. And for those of you who had already clicked on the like button, thank you very much for your support. So it's on this note we have come to the end of today's Forex Morning Mastery session. And we were able, though we started very late, I'm very sorry about that, but I know a lot of people missed out on this session, but the replay is always available for you guys to come back and check on whenever you have the time. So it has been a wonderful moment with you guys. We were able to attend to the 3 financial assets on our watch list, which includes the USOILSPOT, the GBPUSD, and the XAUUSD, which have been doing very well since the beginning of the week. And in fact, we were able to use the historical data on the chart to strategically position ourselves for the next move. So I do hope you marked out these levels as we did illustrated during the course of the session. If you had done that, well done to you. So all we just need to do right now is exercise patience and allow the structures to mature. And always remember that every decision we make is more or less an educated guess until price action hits your TP target. Now, with this understanding in mind, you do want to be having a well-defined risk management strategy in place. And for those of you who joined us for the first time, I do hope you were able to gain one or two things from what we discussed here today. If you did, you want to be part of the subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So I look forward to seeing you guys same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare ourselves for tomorrow's trading session, which promises to be another exciting one, as everyone looks forward to what the Fed chair is going to be saying tomorrow. So we may likely see some volatility tomorrow, giving us more privileges to build on the momentum we've gained since the new week began. So I wish us all the best of luck today. Do have a wonderful evening. Trade smart, trade consciously, and see you all later in the comment sections as we continue to monitor price action. Bye bye.